So I really did not think, and I haven't for a long time, that this was going to be a quote-unquote event. It's a bigger event for the people who make content about the Fed than it is for the people who are actually investing and trading. So I think everything that was announced today was pretty reasonable and was right up with everyone's expectations. But I think the story right now is really about analysts were too pessimistic about the numbers that have just been reported for Q3. They started to lower their expectations toward the end of the summer, and that turned out to have been wrong. Companies are really weathering these supply shocks and labor shortages and price increases better than most of us, myself included, would have imagined. And now you're in the situation where you've got behavior normalization on a grand scale. Lyft just told us that. They told us that people are getting back to their normal lives. They're taking Lyfts back out to dinner, weekend stuff. They're going back to airports. So that is exactly what we're seeing when we look at the retail space. Look at the XRT up 3% today. Look at Nordstrom plus 4%. Macy's plus 7%, highest level since early 2019. Dick's is going crazy. My stock, Simon Property Group, forget about it. Forget it. It's gone. It's up 100 points from where we were talking about it last summer. And now the transports are rocking. So people's behavior is normalizing. The Russell is busting out. The materials are busting out. The airlines haven't been doing anything for weeks. Now they look like they want to break out. And if you just understand these two things, that we're weathering high prices better than expected and that people's behavior is normalizing, it keeps you in this market and not obsessing over 15 billion in taper versus 20 billion or whatever. That's really what we want to focus on.